Hello, this is Cryptolyze. I hope you are well. This Tuesday, 17 October 2023, we meet today to talk crypto, to talk BTC, to talk fake news. And yes, as you could see, we had a huge pump which was really linked to a fake news. We're going to see all this together and it'll start right away. As a reminder, you always have the possibility of having free access to the educational course, which is a 60-hour training course worth €400, which allows you to learn blockchain, crypto, investment, technical analysis, trading, everything to become profitable. Through 130 videos, 400 pages of guides, quizzes to find out where you are in your progress, and all for free. To have access to this lifelong training, simply use the platform of one of our partners. Everything is explained in the comments and descriptions. We're going to start right away with the biggest news, which is precisely the announcement made by Cointelegraph that BlackRock's spot ETF was validated by the SEC. Obviously, it was wrong, but we ended up with a wick that went to 30,000, and microdust. So how precise it really was, and then collapsed on itself. We will look at that later in the technical analysis, but we are really in something that is quite extraordinary in terms of volume, especially since we broke 72 million short positions. We really had a big position pack. I showed you on several dailies that we had this liquidation block waiting for us. Well, I admit that I didn't expect to see a candle like that tear off absolutely everything. And to know that it was really fake news. A few hours later, a few minutes later, I think it was 30 minutes later, it was deleted, and in this case they made a communication saying, but don't listen, don't worry, we apologize for this tweet, and precisely it's a, here we are, we're going to do an investigation, we're going to check what happened. Well, it's certain that there will be heads that will roll, nevertheless. The fact remains that the mea culpa went very, very badly, I admit. Especially since the director in charge of Cointelegraph was in Dubai in a discussion a few hours later and explained that it was not their fault, that overall it was the pressure that we were putting on the media and that we had to be the first right away, etc., etc. Except that yes, you have to be the first, but the first consistent one, okay? This type of misstep should not exist. You are not trying to be the first if your information sometimes is that you have not cross-checked it twice. This is the principle of journalism. It is a profession that is unique. Here, it's not Miss Michelle who posts on her Twitter, okay? It's really a separate medium, and therefore they must validate all of their sources to be able to determine whether yes or not it is good, especially in elements which are as heavy as that. All right? Obviously, we had this huge candle. A lot of people got it wrong and lost a lot of money. So, we're going to move forward a little on the real news because unfortunately that's also the appetite for profit. That is to say that people want to have a linked bull run to that, and we are going to discuss it in the technical part because it is very important to understand how to react to this news, and it will be more in the technical part that we will come back to it. However, in real news we have Fidelity, which updates digital asset, which is one of their software that they put in place, which allows you to determine whether assets are interesting or not, and mainly, which gives access to all the structural information that is found on the blockchain around these assets, whether it is a blockchain, whether it is crypto, whether it is something that revolves around crypto. And that is very positive because there we really have a use of the blockchain through a large fund like Fidelity. And then we're going to move forward in Ethereum, where we're starting to get some news that's circulating, notably from investigators on Twitter who are specialized in on-chain analysis, who are starting to really ask questions about the Ethereum ICO and whether or not the people, the co-founders of Ethereum, lied to the SEC so that the Ethereum ICO passes to know that there was an original minting. Therefore, it is the creation of the tokens to Origin to be able to raise funds. 18 million funds were raised, and in this case, the element that was recovered was a document that was provided to the SEC, and in which we have, in this case, Lubin, who signed a document attesting that there was no concentration at the level of investors, at the level of Ethereum stakeholders, even though we know very well that it was false in this case, but which I like, it's not necessarily the news itself. It's mainly the allegations that are currently being made around Ethereum at a time when we are starting to have hype about Bitcoin on potentially the implementation of protocols which will run on Bitcoin, which would replace Ethereum. It's just the presence of both, and it's as usual we pay a lot of attention to this type of news in which we take a step back. Obviously there is a risk, but this risk has always been present. I mean, it's not news that the SEC is interested in Ethereum. It's already been a year and a half, 2 years, 2.5 years, it goes by quickly, 2.5 years. So in my opinion, it's reheated news. We know that there are elements. That's still relatively low. I think that if there was material, the SEC would already be on it, or at least is already on it, and we should have information shortly. Personally, I take a lot of distance from that, and especially given the decentralization of theorems currently. We continue by talking really tech. We have Manta, which is a big protocol, Manta Pacific, which is optimistically migrating to the new layer 2 of Polygon. So here we once again have a new migration which takes place from an external protocol to Polygon. Once again, I remind you that Polygon systematically absorbs projects that are elsewhere to integrate them into their ecosystem. And this is always what is really impressive about Polygon. It is their ability to be able to globally cannibalize all the decentralized applications that are around them. Next, we have Uniswap, which is very much talked about with two things. One, the fact that they will add 15% of token exchanges, whether on their web interface or their wallet. So those are fees. At the same time, we expected it a little bit, but it still remains relatively important on certain cryptos, not all. And above all, what is interesting to see is that we have this policy which is arriving with the implementation of a KYC hook. So if you don't know what a hook is, it's the possibility of being able to develop around a functionality that Uniswap makes available. This implies that Uniswap provides developers with something that allows them to interface with KYC, therefore an identification process to validate the person. And there we arrive at a notion of compliance which is relatively strong at the level of Uniswap. So it pleases, it does not please. But in any case, there is a real transformation which is taking place at level of the protocol, and in any case it is visible that it is on the hook. Whether it is on here the 15% which are made available, it is not for nothing. So we're going to move on to the technical part, and we're going to immediately look ahead to this bullish acceleration that we've had. Here we are going to go to the CME because it is really very interesting on the CME. We see that we went to look for this enormous candle in which we swallowed almost the whole thing, and we went to look for it. A little bit above 30,000, we went to 30,300 on the CME, but above all, we went to seek the superior liquidity of this whole block there. So all this imbalance we went to seek, we also went to look for the liquidity that was there before the fall. So here we have a return to the box. We really recovered all the liquidations that were here, and that is really important. We will review it later hour, in which we really recovered absolutely everything and collapsed on ourselves. When we look a little more and return to this notion here of the total index and a consolidation of prices, we see that in fact we have indeed recovered this time not the liquidity of the superior cow, but we went to strengthen it. And what is interesting to see is that we go back. We see that we stopped right on this very important level, which is a support level, and which has become a resistance level. Support which stopped on the China ban, which kept us a little afloat on the Terra Luna before reaching the Celsius where we sank. But that doesn't mean it's also a level in which we bumped once, twice, 3 times, okay? So we really have this resistance, which is very strong. And what's interesting is that we really stopped on the 30,000 even though we had massive enthusiasm. So with that, I'm just going to take a little break to talk about this notion of infatuation. We had a huge candle on this news, and what is important to see is that already on this candle, we made almost 8%, I believe, on fake news. What would have happened if this was the real news? Would we have been able to break that? Clearly, people are currently speculating about the validation of an ETF. If ever it is real news, given what happened, people consider that we could very quickly find ourselves at 40,000, not stop at 30,000 and 40,000. What is interesting is that this is something that is beginning to be validated. But what is also important to see is that the movement that took place here was carried, yes, by a bullish acceleration, but also mainly by a liquidation. Will we be able to have the same type of liquidation at the time of the actual announcement of the validation of the ETF? I'm not sure. I'm really not sure. Precisely, we will quickly look at the level of Kingfisher where we see that we have withdrawn all the liquidity that was there. And when we look, the liquidity at the top is very, very high. Really very, very high. We're talking about liquidity, which is at 42.5, between 40 and 42.5. We have a little bit above 32,500, but it really remains weak. The large liquidities nearby are low liquidity. So do we have the capacity, if it is ever validated straight away, to go to 40,000? I want to tell you it's going to be complicated. Given liquidity, there is going to be complicated. It is not said that we have the same liquidity at the time of validation, so we will have to wait, check at that moment. But there we really had a large block of liquidity before, in the short part. This is what made it possible to have this big acceleration and at the same time create this very strong FOMO which lasted half an hour, in which we will go and look at the prices, but we will really see the collapse of the price which has occurred. However, at the level of equity, we see that we have recovered a large part of the wave which was structured here. And that what is interesting to see is that this upward acceleration is a perpetual upward acceleration and okay spot. We really had the two that arrived, and so that's rather positive. It means that if we ever have validation of one of your spots, that means that the movement will be absolutely supported by the two, and therefore we have a real craze, which is in the making, a validation, in fact, of the craze in relation to the endogenous element. Clearly, this validates something for us. It is that BTC and cryptos in general are waiting for the endogenous element linked to BTC, therefore, which is the ETF, to be able to move, which explains the low volatility that has been going on for some time. And we can clearly see that we did have a return of volatility at that time. So this is really, in fact, the narrative that is currently being played out. We don't care about tech. We don't care about investments. What we mainly want is the ETF, and we don't want to have the security that is coming to cryptos in general. We really want to have the ETF. And why am I telling you this? Because when we look at a view here, we may go to one day, it could be better. But when we really see the bullish acceleration that we have in terms of the dominance of BTC, it clearly shows that this is a BTC movement. It is not a crypto movement. So yes, there was a little bit in cryptos, but it's well below the rest. It's an Ethereum to push, but it's very weak. Whereas here, we can clearly see the dominance which has taken over. So it is really a movement which is specific to BTC, and BTC, the engine of the upward acceleration that we could have subsequently. And I think that indeed one of the key elements to be able to trigger a bull run will be the validation of ETFs. I think the institutions know it. I think the SEC knows it, and that's one of the reasons why I don't think it's validated as quickly as that. I think there will be a period of delay in relation to the U.S. crisis that we are seeing at the banking level. Short term, we're going to talk about short term. What is interesting to see is that, yes, we did a search for liquidity here. What is also interesting to see is that we have not swallowed the whole candle, yes. We're just going to zoom in a little bit more to clearly see that we have swallowed almost 90%, 80% of the candle of the first candle, but we continued to consolidate above to return, in fact, retest this level. So here for me, we are in an attempt to consolidate above the range to potentially re-enter here because we have the retest zone, which is located here. So we can clearly see that this is what is holding us here because it is a retest zone which corresponds to the range above. We have the low range, we have the high range, and there precisely we have made an incursion into it, and we are trying to re-enter it, except that we are systematically rushed. So for me, I consider that we have here a possibility of a rush, and therefore a bearish continuity for, at a minimum, to go and retest this part. The 27,000, we will say, we will retest 27,000, which is the beginning of this bullish acceleration, to then see whether yes or no we consolidate and we make a bullish acceleration again, or do we really break to validate this downward trend that we have had for some time. Besides, I'm going to leave that out because we have already validated 1.1 and make a bearish continuity. For what? Because in fact, when we take a step back and we see very clearly that there is a possibility of having a bearish continuity, this is not validated because the only thing we see here is what? Hop, you'll see it's magnificent. We see above all a form of consolidation here. Okay, compression that we find here because we have a high in which we have made a high which N has not broken the precedent. So we are in a potentially bearish approach, except that the low has not broken the precedent. So for the moment we are maintaining, so that is a vision of trend. Okay, we remember that I explained to you that we are not in a trend, that we are potentially in a range. The range here, 25,000, 30,000, carried by this area. We see that we went to retest the top of the range in a single strand. Here we can consider that it is the deviation, second deviation, or we can consider that it is a top of the range, which will be replaced here. But nevertheless, in fact, we are still in this range, so it doesn't matter that much that we look for the liquidity above, that we go back, why not retest the 31,000? This would validate for us precisely the fact that we are in this form of lethargy, because clearly we see the movement that we had with the ETF. If we do not have an ETF, we will not have any movement similar, okay? So this implies that we will have a stretch, and therefore we will go further down to retest the lower part, and then start rising again. For me, it changes absolutely nothing. We remain in this approach, except that the retest will be much more complicated, and there we will have to take a little step back. Wait until we have the end of the liquidity arriving because that really hurt. As a reminder, we liquidated 110 million, so not just shorts, 110 million in total, because there was the liquidation of the longs which was in position at that time. It was for that reason we also had a deceleration which was as strong as that. So we are really in this idea where we had a shock at the market level. So it is very likely to have a consolidation, and we will have to wait to see the construction of liquidity, especially at the order flow level, because this acceleration has led to two things at the order flow level. One, here we can clearly see the real drop in open interest, so we really broke all the shorts that were present, so we did not consolidate. Enough longs here. We still liquidated a lot more shorts that created long ones. So for the moment we are really in a purification here of the shorts. So that's it. It's done. The shorts are refined, and in which here we find ourselves on top trader positions which do not have not moved. In this case, when I see something like that, I tell myself that we have not changed. We are still in range. We do not have the establishment of an upward trend. We does not have the implementation of a validation of a bearish trend. In any case, the validation of the bearish trend will be validated by what? It will be validated by a break of 25,000. A validation of the upward trend will be validated by a break here. Really, we will say a break of 31,700. So for me, these two levels, as long as we don't break one or the other, we find ourselves in a range dynamic and we deal with the range point. That's all. We stay in this dynamic at deal only with range. A little vision just to clearly see that we have cleaned everything up and that we are not yet able to create many long ones. I think that if we consolidate here, we will really have a reinforcement of the long ones there. And so there we will really have, on the other hand, the implementation of a long squeeze, which risks hurting a lot later. So we're going to finish quickly with the macro because macro is quite interesting. We've been trying to retest here the retest part to see if the day is being validated or not. It's going to be very interesting because we could very well have retest, next retest, and then bearish continuity. Is a bullish acceleration here and a break of this zone there to reach the zone of 4,450. So here we are in a classic approach, so we are in our plan. That has not changed that. In what we defined yesterday, it's happening exactly as we expected. The same with oil. We see that we have a nice release which is taking place. For me, it is very weak for the moment. We are mainly retesting this level of 86, so either we manage to break. So here we are really going to sink, or we make a small rebound and we are going to retest the game there. So to see, I think we will have validation today of the potential setup. We have the DXY, which is in the process of breathing, short-term breathing, which is mainly linked to the assimilation of the conflict between Israel and Hamas, and in which we necessarily have the positioning of the Americans who position themselves on it. So obviously we will to have a tension which will be created there, and a tension which is also being felt at the level of the bounds, but that will not be for today. We will certainly talk about it in a daily or see in the video from Saturday. We're finished for today. I hope you liked it. If so, don't forget to leave me a like and a comment. It always makes me very happy. Tell me, too, if you overreacted to this news. Did you believe it? Are you like everyone else shouting bull run as soon as you got this news? Or have you been procrastinating? Remember, emotions are very important. And besides, we're going to talk to 1330, in fact, fetches crypto. So a crypto that is specialized in artificial intelligence. You know that I'm not really a fan of this typology, so it's interesting to let's talk about the fact because it's a crypto that is interesting in this ecosystem, and I'll explain why to 1330.